May profits be upon you. This is RT Money representing Lines NFX and welcoming you back to my YouTube channel. Glad to see you. Let's take a look at EURCAD. EURCAD. Why am I looking at that? Because on the RT Money strength meter for the week coming March 28th, we can see the rankings are such that the CAD is third and the Euro is seventh. All right. I'm looking at the CAD because it is 2 or better. 2 or better on the strength meter means that there's a high probability that price is going to continue higher. All right. -2 or lower shows that price is probably going to continue lower. All right. And these are the extremes. You want to put the strongest with the weakest. All right. Top 2 or 3 with the bottom 2 or 3. That's the way this works. All right. Anyway, let's take a look on the charts here. We're at the monthly, right? And the first thing I want to notice is where's the last break of structure? The last break of structure is right here. Okay. And if we break structure to the downside, that means we are bearish. Now, why am I calling that structure? Because we broke the high here. All right. We had what it was a potential higher low here, but it didn't make a new high. It didn't break that high. That would tell us that we are continuing bullishly like we were doing prior, right? We were looking for a higher high, all right? That didn't happen, okay? So this becomes a swing point. And when we break that swing point, well, that looks very, very bearish to me, all right? The break here, the higher low that made this highest high, the peak high, well, that is a break of higher time frame structure. This is the trading range. All right. This is substructure because it's within this trading range. All right. But we broke both. One, two. So this becomes the top of the trading range now with this bottom, and this is the bottom, and that's where we are. All right. Do you understand why am I bearish? Because we broke structure to the downside on the monthly. All right. Now, where is it heading towards? Well, look at this area right here. This is a lot of demand in that, a lot of demand. But before we even get there, we're looking for an unmitigated area where price could potentially, reverse from. All right. So I don't mean to look there. All right. So if this is the area that we're looking in, right? If this is the demand zone, all right, that's the way I would mark it. If we refined it, if we refined it, I would first start here in this wick, because it's unmitigated. This wick is unmitigated on the monthly. So this is a refinement of this order block. All right. We haven't touched here yet. All right. The price hasn't touched here yet until now. All right. And because this is a higher time frame zone, we can look at it on the weekly. Right. If we go all the way over, we can see, all right, we can see that we got an unmitigated zone of supply here. All right, came close to mitigating here, but we didn't touch it. All right, and if we go all the way back over here, you can see that we did have a reaction to it here. Right. The reaction took us all the way up. This is the extreme of that reaction. All right. If price continues down and breaks that, this is going to be a high probability trade here for a short position. But we're getting way ahead of ourselves right now. If we're looking up here. All right. Because there's a lot of momentum that came into this market, bringing this price down, a lot of momentum. So, that's just something that you want to make note of and keep in mind. All right. If we go down to the daily, again, if we go all the way back over here, can we refine this this area anymore. No, we can see the same area is still there. Okay. Same wick area. It has not been touched yet. All right. Until now. All right. We are in this POI. We are in this POI, all up in it here. All right. And this brings us to my favorite time frame, the 4 hour. We have a 4 hour zone here. Okay. And prices now making contact with this this POI, and we have the initial rejections here. All right. So what does that make me want to do? It makes me want to zero in, makes me want to go into the lower time frames to see what the price action looks like. All right. Again, we are inside of a refined monthly, weekly, and daily zone of demand. Okay, a zone of demand, and we're looking for the potential, that this market may reverse here. All right, we may see a reversal of some kind. It doesn't have to go all the way up. All right, it doesn't have to be that kind of reversal, but because it's a higher time frame zone, all right, it gives the probabilities. It increases the probabilities that we may see some kind of reversal here. Okay, so that's what I'm looking for. And I just want you to know, excuse me, that this is the extreme, this is the initial reaction, all right, the most recent reaction. We had a reaction here, right? You see that price came down and took that liquidity from that low point, all right? We have another reaction here, and this is the one I'm going to measure. This is what I'm going to note, all right? Because if price, let me get this down here, all right? If price continues down from here, all right, and breaks this zone, I'm looking for price. If it does come back here, I'm looking for price to touch this off, all right? This will be a pro trend trade to take a short, all right? And because it's what do you call a pro trend trade, all right? It increases the probabilities of success, all right? This is, again, we have to wait until a zone of demand, an opposing zone of demand is broken and then retraces. All right, that we got to wait. We got to wait for that. Now, just want you to bear something in mind. All right, after every break of structure, we expect a pullback of some kind, right? We had a break of structure here. All right, that's something that I'm not going to ignore. It came down. Price did come down after the pullback up. All right, and took liquidity from this point. All right, we took liquidity here and a larger one, if I can just get this over. Just get this over. We took another liquidity point from the earlier one, from the higher time frame. All right, that's a lot of liquidity, and that prepares the market to go the other way. All right, so what am I thinking? I'm thinking that we had a recent break of structure here, a recent bearish break of structure here, and we can expect some kind of pullback to a either a decisional a zone of supply or the origin. All right, I'm looking for right now. I'm looking for a zone that has not been mitigated. All right, and this price action has been pretty doggone efficient. Okay, with pullbacks into areas of imbalance. All right, now we have an area of imbalance here, but I don't know how practical it is to expect price to come all the way back up here. This zone here is pretty nice. Pretty what do you call it? It looks pretty valid to me because we broke low. You know, that's important. All right, we come back up and then we break this low. These are zones of demand. If we're breaking demand, you know, supply is in control. Okay, so I can't see it making it all the way up here, but we're gonna keep it in mind. All right, from here, there is this zone. I'm not gonna count them all. All right, it has not been mitigated yet. This wick supply here. All right, we have some wick supply here as well. All right, I just now noticed that. All right, we have wick supply here. All right, and we come back up, pretty efficient price movement here. So we have relative equal highs. So price could very well come all the way up. Price could come all the way up. We're just going to keep these areas in mind. That's all. You know, that's all we're going to do. This area here doesn't look like it's been mitigated. Okay, hold on. Let me make sure I mark them as I see them. All right, we did have a candle come up into this area. All right, so this area, a refined zone here, might see something like this after it takes liquidity and comes up in here. That wouldn't be a bad move, but I'm looking at the most recent here, and if we continue past this demand zone here, if we break past this demand zone, and illustrate, if we break past this demand zone, why doesn't it pick up? If we break past this demand zone, I'm looking for price to turn around here. What does that turnaround look like? A low, a lower low, a break of the swing high, and then price coming back into this leg of structure to go up higher. That's it. That's what I'm looking for here. And we're going to look on the 15-minute for that. All right. A change of character is what we're looking for. I'm trying to get through this so I don't have a very long video for you to have to endure. Okay. All right. I'm moving all of this over just a little bit so we can see that. Boom. Boom. Okay. What's going on with this? My computer has been acting weird. All right, see how we have the low taken lower. We're taking low. We took that low out too. That's what I'm looking for. I'm looking for. Nope, not that one. I'm looking for these lows to be taken out. Oh, come on, man. I'm looking for these lows to be taken out, and then the swing high to be taken. As soon as it comes back in here, this will be a counter trend trade. All right, and this would be based on a change of character. Okay, but I believe this is going to have some legs to it, and there's plenty of pips to get, in my opinion. It's a worthwhile trade, but when it comes to counter trend trades, I like to see confirmation. Okay, I'd like to see a high break that. All right, if it comes down further, no problem. All right, we break that, but as soon as it breaks this, I'm saying, what is the high that led to this low? This would be our change of character here, but I'm looking for a stronger confirmation because it's counter trend. So I would like these highs broken, a pullback, and then get in on that pullback here. You understand? A more aggressive trade would be at the initial change of character. If price breaks this low, comes back up, breaks that high, and you're looking in this leg of structure for price to come back into to take a trade, an aggressive entry. Right? Yeah, you'll get in sooner, but it's not as high probability because it's counter trend. With counter trend trades, it can turn back at any point. You understand? All right. But I am looking for a change of character in this higher time frame zone of demand. Okay. but I don't want to take shorts until I see this zone broken. I don't want to take those kind of shorts. All right. You just, it's because if you take it early and you take a short from up here, or you take a short from up here, it can come back here and still get rejected. You understand? I'll wait until it's proven that it's strong enough to take out a demand, and I'll catch the pullback for a pro trend trade. I hope that analysis helps you. All right. I hope it helps you see what I see. Okay. And I think this market, to recap, I think this market is going to go lower, but after a pullback. There's a fair value gap here, a, what do you call it, an imbalance right here. All right, on the way to, sorry, on the way to supply. All right, so I would like to see that filled. I would like to see price gather or generate liquidity before it touches this zone. I would like to see price do something like this, give an inducement for people to take shorts early, and then come and take them out, and then take the short. That's what I'd like to see. I'd like to see generation of liquidity. I'd like to see a fill of an imbalance. I would like to see a supply zone that has accomplished something like breaking lows and breaking through opposing demand zones. I like to take these kind of shorts. That's a high value zone of supply for me. Do you understand? Because of the criteria I just described. All right. Trade safely. All right. And I hope you found this beneficial. Make sure you tap that like button. All right. Just tap it. All right. Just pluck it. You know, you do whatever you got to do. All right. And like and subscribe so you can catch the updates. And check out the 2 videos, both of them that are on your screen right now, because both of them will help you for the week that lies ahead. All right. I'll see you in the next video. Thank you for sharing a couple of moments of your Sunday with me.